It's Friday, the 20th of January 2023. Welcome to the Fast 5 by Fear and Greed, where we give you the top 5 business stories you need to know in just 5 minutes. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, 5 stories in 5 minutes. Let's jump straight into it. Story number 1, Australia's unemployment rate held steady at 3.5% in December, even though the number of people in work actually fell by nearly 15,000.
Yes, now the 3.5% number is the same as the November figure, which was revised up from 3.4%. So unemployment is around its lowest rate since the early 1970s. Now, the loss of jobs was unexpected, and Federal Treasurer Jim Chalmers said the disappointing result was largely a combination of a slowing global economy and higher interest rates beginning to act as a brake on growth. But, Michael, let's face it, 3.5% unemployment rate, can't complain too much. What's it mean for interest rates? Well, it will play into the Reserve Bank's deliberations in its meeting in a couple of weeks' time. Market economists are mixed in terms of what they think will happen. A pause or more rate rises, probably in 25 basis point increments. Certainly, most think there won't be too many more rate rises. The Australian labour market is still in very good shape. That'll certainly support income growth, but it will probably soften from here. And remember, inflation readings are pointing to a downside surprise in the December quarter CPI data. The Reserve Bank's got plenty to think about when it meets in early February.
Yeah, sure do. And plenty of mortgage holders that are watching it fairly anxiously, I'm sure.
Yep.
Now, on to story number 2, Sean. And yesterday, the local share market hit a new high since April last year, and it's only 2.5% from its peak now, and that's despite fears of a recession in the United States.
Yes, that's right. Now, the local market did particularly well yesterday, unlike many global markets. That's probably around those employment numbers. It's up nearly 6% this year, with materials, telcos and healthcare companies doing very well yesterday. So far this year, much of the boom has been among resources and tech companies, but especially gold stocks. Market leader Newcrest Mining is up more than 40% since its bottom late September last year. In risky times, investors like gold, and that's what's happening. Just as an aside to that, US markets are really choppy at the moment, and in fact, many people are betting that there'll actually be interest rate cuts in the second half of this year in the US.
Sean, story number 3 is a really interesting one. National Australia Bank has become the second of the major banks to create a stable coin called the AUDN to allow its business customers to settle transactions on blockchain technology in real time using Australian dollars.
Yes, it gets a bit complex, but it highlights the role of banks driving innovation in the digital economy. Now, NAB wants to launch its stablecoin in the middle of this year for trading carbon credits and sending money overseas. That's according to a report in the Financial Review. The stablecoin is fully backed 1-for-1 with Australian fiat money held on trust in the bank. It'll use the Ethereum network. It comes 9 months after ANZ created a similar product known as the $DC. Now, the creation of these individual stablecoins came after the big banks couldn't quite get together and work out how to do it as one. There were competition concerns there. So now they're all thinking about doing it on their own.
Okay, on to story number 4 now. And Microsoft has become the latest large tech company to reverse a pandemic-era recruitment spree in the face of a slowing economy, announcing plans to shed 10,000 workers by the end of March, or nearly 5% of its staff.
It's the latest round of job cuts in the tech sector after a boom period during COVID. Microsoft added 40,000 workers in the last financial year, more than double the year before, after Chief Executive Satya Nadella predicted that customers would continue to spend heavily on technology despite rising inflation and economic stresses. But yesterday he was much more cautious, saying customers were now optimizing their digital spend. Remember, earlier this month, Amazon announced plans to cut 18,000 jobs. Salesforce, it has almost 80,000 employees. It wants to shed 10% of its staff. Facebook and WhatsApp parent Meta said it will lose about 13% of its staff. They said that late last year. Job cuts are coming thick and fast.
Yeah, they sure are. On to story number 5, last one. Prime Minister Anthony Albanese has paid tribute to outgoing New Zealand Prime Minister Jacinda Ardern after Ms Ardern abruptly resigned yesterday, saying she didn't have enough in the tank to keep going.
Mr Albanese called her a leader with intellect and strength. Now, Kiwis go to the polls later this year in October, and Ms Ardern said she was stepping down for personal reasons, not because she didn't think she could win the election. She's very popular outside New Zealand, much less so internally. Miss Ardern won a landslide victory in 2020, forming the first majority government in New Zealand's multi-member electoral system. She won plaudits for her sensitive and empathetic response to the Christchurch mosque massacre back in 2018, and she became just the second world leader to give birth while in office. Good luck to her.
All right, that's it. The top 5 business stories in 5 minutes. Thank you, Sean.
Thank you, Michael.
It's Friday, the 20th of January, 2023. Remember to hit follow on the podcast. It's very important. And if 5 minutes isn't enough, you can find our longer daily show called Fear and Greed wherever you listen to podcasts. I'm Michael Thompson, and that was the Fast 5 by Fear and Greed. Have a great day.